This video is created by Jagrat Creations. I invite all those students to this video lecture who has an intention to study joint venture accounts. I want to solve one sum on joint venture account wherein no separate set of books are maintained. So independent separate books of accounts for joint venture transactions are not maintained. So I want to take care of one sum wherein separate independent books for joint venture are not maintained. Then do you mean to say that the transactions are not recorded at all? No, it's not so. Transactions are recorded. By whom? Either one of the partner or by all the partners, the transactions are recorded. But no separate books of accounts are maintained. These transactions are recorded by a partner in his own business books of accounts. I would like to explain this concept by taking into consideration one sum. Just to observe the sum on the screen that I intend to solve. First I will read, then I'll explain, and ultimately I will solve the sum. On 1/7/2016, Hitesh and Shailesh entered into a joint venture with a condition to share profits and losses equally. So there are two partners, Hitesh and Shailesh. They are going to share the profits and losses equally. It was decided that Hitesh is to be paid a commission at the rate of 10% of the sales made by him, and Shailesh is to be paid a salary at the rate of rupees 1,000 per month. So another partner is going to get salary and Hitesh is going to get commission for the sales affected by him. This is how they have acted. Now per month 1,000 rupees are to be paid. Joint venture has started on 1st of July and on 31st of 2017 the joint business was closed. So from 1/7/2016 to 31st of 2017, 9 months, at the rate of 1,000 per month, for 9 months, salary will be paid. Following were the transaction relating to joint venture for the period up to 31st of 2017. Hitesh gave goods worth 44,000 from his own stock and paid 2,500 for freight and insurance. Shailesh purchased goods worth 40,000 at 10% trade discount and gave the same in joint venture. He paid 1,500 for freight and carriage charges. Hitesh sold some of the goods for rupees 1 lakh and paid 2,000 as sales expenses. Hitesh sold remaining goods worth 20,000 after adding therein 20% profit on cost price and paid rupees 1,180 as carriage outward. Shailesh agreed to pay 500 for stationery purchase for joint venture from Shilpa Stationery Mart on credit. On 31/3/2017, the joint venture business was closed and both the co-venturers settled their accounts. Now this is the transactions of the joint venture business. From the above particulars, in the books of Hitesh, record joint venture transaction Shailesh account. In the books of Shailesh, prepare joint venture account and Hitesh account. Now see. If the separate independent books of accounts are maintained, then they are identified as the books of accounts of joint venture business. Here, separate independent books of accounts for joint venture transactions are not maintained. That doesn't mean that the transactions are not recorded at all. Transactions are recorded. By whom? By Hitesh. Where? In his own books of accounts, his personal books of accounts, he has recorded all the joint venture transactions. Similarly, in the books of Shailesh, there are personal books of accounts of Shailesh, wherein Shailesh also records joint venture transactions. Now, when a partner records joint venture transaction in their personal books of accounts, which are the accounts that we are required to prepare? We are required to prepare joint venture account. In the books of Hitesh, you can't prepare a Hitesh account because Hitesh cannot exchange any goods and services with himself. So when you are preparing the books of Hitesh, you can't prepare Hitesh account because there cannot be a transaction of Hitesh with Hitesh himself. So when you prepare the books of accounts of Hitesh, Hitesh account cannot be prepared, but you have to prepare the other co-ventures account, that is Shailesh account is to be prepared. And to find out the profit of joint venture business, you are required to prepare joint venture account. Here when the same transactions are recorded by Shailesh, Shailesh cannot prepare the account of Shailesh in his books of accounts. He has to prepare Hitesh account. So when Shailesh records, he prepares Hitesh account. When Hitesh records, he prepares Shailesh account. So this is how no independent books of accounts are maintained. Partner records joint venture transaction in his personal books of accounts. Now the question arises. Here Hitesh records joint venture transactions. The question is, does he record all the transactions of joint venture business? The answer is either yes or no. If he records all the transactions of joint venture business, then he has to prepare joint venture account. And as you know, he is also required to prepare Shailesh account. But suppose Hitesh says that I am going to record the transactions of joint venture, only those transactions to which I am a party to a transaction, or I am going to record only those joint venture transactions wherein I have given value to the joint venture business or I have received value from the joint venture business. So in that case, Hitesh is not recording all the transactions of joint venture. He is going to record only those transactions with which he is concerned. Now see, if that mode of recording the transaction is there, that I am going to consider not in this sum, that I am going to consider in the next lecture. Similarly, when Shailesh records the transactions of joint venture business, does he record all these transactions? Or he records only those transactions with which he is concerned? Here in this sum, we presume that Shailesh is going to record all the transactions of joint venture. So Shailesh is also required to prepare joint venture account and Hitesh account. So, now what are the methods of accounting for joint venture transaction? The first method, independent books of accounts are maintained. For that I have already released video for the students. Now, no separate books of accounts are maintained. Then there are two options. Whether the partner records all the joint venture transaction in his personal books. Does he record all the transaction? If yes, then this is the method of accounting that I am going to take care of today. But if the partner records only those transactions with which he is concerned, that will be considered in my next video. So here, we are going to first of all prepare the books of accounts of Hitesh, wherein we are going to prepare joint venture account and Shailesh account. Then we shall prepare the books of Shailesh, where there also we are going to prepare joint venture account and Hitesh account. Now let me start first preparation of Hitesh account and how the books of accounts are prepared, that I am telling you now. So I want to record the transactions. This is the details of the sum. Books of Hitesh. I am going to prepare two accounts. One is joint venture account and second Shailesh account. So two accounts are prepared. Now first of all, what is their profit sharing ratio? Hitesh and Shailesh entered into joint venture with a condition to share the profits and losses equally. So their profit sharing ratio is equal. So I just write at the top for my convenience the profit sharing ratio being equal. Now, following transactions were entered into. Hitesh gave goods worth 44,000 from his own stock and paid 2,500 for freight and insurance. Now I am Hitesh. I do business. I have got my personal business. In my personal business, I have got a stock. That stock is given for the joint venture business. Joint venture means short-term partnership. So goods are given by me to my joint venture business. Now when I give goods to the joint venture business, in a personal capacity, that transfer of goods is in my personal capacity, it is identified as sales. And for joint venture business, it is a purchase. If the goods are purchased for joint venture or if the expenses are incurred for joint venture, the purchase account and expense account is not debited, but the joint venture account is to be debited because we prepare joint venture account to find out the profit or loss of the joint venture business. So when the goods are given by Hitesh to joint venture business, it is just like purchases for the joint venture business, and purchases and expenses for joint venture business will be debited to joint venture account. And in the personal capacity for Hitesh, it is a sales. And when the goods go out, the stock goes out of the personal ownership to the joint ownership, it amounts to a personal sales. So sales account is to be credited by Hitesh. So the journal entry for first transaction, joint venture account debit to sales account, being goods given for joint venture business. That's an important transaction. Now same way, I am Hitesh, I have paid expenses. Expenses are paid for joint venture business. Expenses paid for joint venture business are not debited to expense account, but they are debited to joint venture account. Cash goes out of my pocket. When cash goes out of my business, cash account is to be credited. So the second expense paid transaction will be recorded. Joint venture account debit to cash account. So joint venture account is debited. Cash account is to be credited. I haven't prepared cash account because cash account is a part of my personal business, and here also I have not prepared sales account because here I am going to record only joint venture transaction for joint venture profit distribution purposes. Now next transaction, Shailesh purchased goods 40,000 at 10% discount. So 40,000 minus 10%, 4,000. So goods valued at 30. So goods purchased for joint venture business by Shailesh is 36,000. Now goods are purchased by Shailesh for joint venture business. For joint venture business, it is just like purchase. It is purchases, not like purchases, it's purchases. Purchases for joint venture business are to be debited to joint venture account. Expense for joint venture business are to be debited to joint venture account. So here goods are purchased for joint venture account is to be debited. Who has given this good? Shailesh has given this goods. Shailesh is a giver. Credit the giver. So when the goods are given by Shailesh, the journal entry for that is joint venture account debit to Shailesh account credit. 36,000. So I am Hitesh. When I give goods to joint venture business, I credit sales account. Joint venture account has to be debited because it's a purchase for joint venture. But when I give goods from my stock, I will be recorded, the opposite account will be sales account. But if the goods are given by my co-venture, my partner, he is a giver, then Shailesh account is to be credited for that. Now expenses are paid by Shailesh 1,500. It is an expense for joint venture business. So joint venture account is to be debited. And the payment is made by Shailesh. Shailesh is the giver, credit the giver. So Shailesh account is to be credited for 1,500 being paid. So the journal entry joint venture account debit to Shailesh account credit. Now Hitesh sold some of the goods for ₹1 lakh. So I am Hitesh. I sold the goods. Some of the goods are sold for ₹1 lakh. Now as I have sold the goods, I got the cash of ₹1 lakh. Cash is received or check is received. If the cash is received, cash account is to be debited. Or if the check is received, pays account only check is received, then the bank account is to be debited. So cash or bank account is to be debited. Now these sales has occurred of joint venture business, and when the joint venture business sales occurs, it's an income or gain of the joint venture, so it should be credited to joint venture account. So cash or bank account debit to joint venture account debit is the journal entry for goods sold 1 lakh. Now 2,000 rupees sales expenses are paid. Expenses are paid for joint venture business. If the expenses are paid for joint venture business, joint venture account is to be debited. As I told to you, for joint venture business, if any purchase occurs, any expenses are incurred, any loss occurs, all these purchases, expenses and losses are to be debited to joint venture account. Income, sales, gain, revenue of joint venture business are to be credited to joint venture account. So here 2,000 rupees expenses are paid. They are debited to joint venture account and cash is paid by me. So cash goes out, cash account is to be credited because this expense is incurred by Hitesh, means me. Hitesh sold remaining unsold goods for 20,000. After adding therein 20% profit on the cost price. Now see, Hitesh sold remaining unsold goods by adding 20% profit on cost price. Now, how to find out the cost price? When you want to find out the cost price for the goods, the purchase expenses for the goods become a part of the cost. That you know very well. So first of all, I would like to find out the cost of goods worth 20,000. So let me find out the cost. So goods sold by Hitesh, its cost of remaining goods 20,000, but we are required to add proportional expenses. So 2,500 are the expenses for this acquisition of goods. 1,500 are the expenses for this acquisition of goods of 36,000. So 44 plus 36,000. 44,000 plus 36,000 is the total purchase price for which expenses incurred are 2,500 plus 1,500. So 2,500 plus 1,500, they are the expenses of 4,000. 4,000 rupees expenses are incurred for the purchase of 44,000 plus 36,000, 80,000 goods are purchased. So proportional expenses 2,500 plus 1,500 is to be distributed on total 80,000 goods. So for 80,000, these are the expenses. What are the proportional expenses for 20,000? So if you work it out, it will be 1,000. So on 80,000, it is 4,000, so it's 5%. So on 20,000, at 5%, it will be 1,000. So 21,000 is the total cost of goods, to which you are required to add 20% profit, 4,200. So 25,200 is the sales price. Goods are sold, so joint venture account is to be credited for that. So joint venture account is to be credited and the cash is received by Hitesh. So cash account debit to joint venture account credit. This is an important calculation. Now, for the purpose of selling these goods, how many what are the expenses paid? 1080 carriage outward expenses are paid, that are sales expenses. The expenses of joint venture business are debited to joint venture account. So joint venture account debit to cash account. These are the expenses paid by Hitesh, means me. I have paid the expenses 1180. Cash goes out of my pocket. So cash account is to be credited. Joint venture account is to be debited. Shailesh agreed to pay 500 for stationery expenses. So this is an expense of joint venture business. So joint venture account is to be debited. And who has committed to pay this 500? Shailesh has committed to pay the 500. So Shailesh is a giver. So Shailesh account is to be credited because he has committed, he has owned the liability. Now all these joint venture transactions are recorded except commission and salary. So it was decided that the Hitesh is to be paid commission at the rate of 10% for the sales made by him. So total sales made by Hitesh is 1,25,200. 10% thereof, 12,520 is the commission to be paid to a partner. From joint venture business point of view, this much commission is payable to Hitesh. I am Hitesh, I record this transaction, commission is my income, personal income. So commission being my income, commission account is to be credited. But it is an expense for joint venture business. And all the expenses of joint venture business are to be debited to joint venture account. So very important journal entry that I am supposed to tell you is joint venture account debit to commission income account credit. So joint venture account debit 12,520 to commission by personal income is to be credited in my personal books of accounts, and this joint venture account and Shailesh account are prepared in my personal books, but it is an expense for the common business, so it is debited to joint venture account. So joint venture account debit to commission account is the journal entry for that. Now at the rate of 1,000 for 9 months, salary is to be paid. So total salary to be paid 9,000 to Shailesh. Shailesh is a giver of services. Credit the giver. This is an expense of joint venture business. So joint venture account is to be debited and Shailesh account is to be credited. Now I have recorded all the transactions. Being Hitesh, I have recorded all these transactions. Now after recording all these transactions, I would like to find out the profit to be distributed in the equal proportion. So 1,25,200 minus all these expenses, you can work out the profit. That profit works out to be 16,000. Now this 16,000 profit is to be distributed equally. So my profit 8,000. That will be credited to my personal profit and loss account, being the profit from joint venture business. So 8,000 is my profit that I'll be crediting to my personal profit and loss account, and it is a distribution from here. So joint venture account is to be debited to profit and loss account credit 8,000, and 8,000 profit is to be given to Shailesh. So joint venture account debit to Shailesh capital account. Shailesh account credit 8,000. This is how profit distribution is to be recorded. So joint venture account debit 16,000 to profit and loss account credit by personal profit credited to my profit and loss account, and the profit to be given to Shailesh. Shailesh account is to be credited for that. Now after recording all these transactions, Shailesh is to be paid. So total amount payable to Shailesh is 55,000, and that has been paid. So Shailesh account debit to bank account credit. This is how accounts settlement takes place at the end. Here Shailesh is paid 55,000. So Shailesh account debit 55,000 to cash or bank account credit 55,000. This is how transactions are recorded in the books of Hitesh. Now I want to record all these transactions once again in the books of Shailesh. Now let me start. So here in the Shailesh book, books of Shailesh, I have prepared joint venture account and Hitesh account. Now for the purpose of explaining purpose, I am recording the transactions in the books of Shailesh. So now I am Shailesh. Formerly when I was recording the books of accounts of Hitesh, I just explained that I am Hitesh. Now I say that I am Shailesh. Now see, the first transaction, goods of 44,000 given by Hitesh. This goods given by Hitesh is just like is a purchases for joint venture business. Purchases, expenses and losses for joint venture business are to be debited to joint venture account. So joint venture account is to be debited. Hitesh is the giver. Credit the giver. So joint venture account debit to Hitesh account credit. Goods sent by Hitesh. Now expenses of 2,500 paid by Hitesh. Hitesh is the giver. Credit the giver. Hitesh account is to be credited. It is an expense of joint venture business. So joint venture account debit to Hitesh account credit. Now I am Shailesh. I have purchased goods. 40,000 minus 10% for 36,000. It is a purchase for joint venture business. So joint venture account debit to sales account credit. So joint venture account for this 36,000 is a purchase for joint venture business. It is the goods are supplied by me. So I have sold it to the joint venture business. So to sales account, goods sent. Expenses paid for joint venture business. I have paid expenses. Cash goes out of my pocket. If the cash goes out of my pocket, cash account is to be credited. This being the expense of joint venture business, 1,500 will be debited to joint venture account. So joint venture account debit to cash account credit, freight and insurance. Now Hitesh has sold goods of rupees 1 lakh. So Hitesh got the cash. Hitesh is the receiver. Debit the receiver. Hitesh account debit. Sales is an income revenue of the joint venture business. Income of joint venture business is to be credited to joint venture account. So Hitesh account debit 1 lakh to joint venture account credit. Hitesh paid expenses of 2,000. Expense of joint venture business 2,000 will be debited to joint venture account and Hitesh account is to be credited for that. So joint venture account debit to Hitesh account credit 2,000 rupees. Hitesh sold remaining goods. Now we have already worked out the sales price 20,000 plus proportionate expenses. As I told you, 4,000 are the expenses for the goods of purchased 80,000. So for 80,000, 4,000 is the expenses. What are the expenses for 20,000? That is 5%, 1,000. So total cost of goods with proportional expenses 21,000. To that you are required to add 20% profit 4,200. Sales price is 25,200. Here Hitesh has sold the goods. Hitesh is the receiver. Hitesh account debit. Sales revenue of the joint venture business credited to joint venture account. This is how sales transaction is recorded. Now 1180 expenses paid by Hitesh. Now expenses is paid by Hitesh. Expense of joint venture business debited to joint venture account. Hitesh is the giver. Credit the giver. So joint venture account debit to Hitesh account credit. Now Shailesh. Books of accounts of Shailesh. I am Shailesh. I have agreed to pay the stationery expenses. Stationery expense is the expense of joint venture business. So when it is an expense of joint venture business, stationery expense account is not debited, but the joint venture account is to be debited. So joint venture account is to be debited. Joint venture account debit to cash account. So this is how expenses paid by Shailesh means myself for purchase of stationery for joint venture business. Here alternatively you can write as the stationery is purchased on credit. Instead of cash account you can write the name of the supplier Shilpa Stationery Mart. So joint venture account debit to Shilpa Stationery Mart account credit, that also you can write. But I have written just cash account. Now commission to be paid to Hitesh. Commission is an expense. So 125,200 into 10%, 12,520 commission. Commission being expense of joint venture business, joint venture account debit. Hitesh is the giver of services. So credit the giver. So Hitesh account is to be credited. So for this commission expenses, Hitesh account is to be credited. Notice it. Now I am entitled to have a salary 1,000 per month for 9 months, 9,000. Salary is my personal income. My personal income will be credited to income account, salary account, but it is an expense for joint venture business. So joint venture account debit to salary account credit. Joint venture account debit to salary account credit. After recording all these things, let me find out the profit, and that will be distributed equally between myself and Hitesh. So 125,000. If you work out the profit will be same, 16,000. That will be distributed equally. My 8,000 profit means I am Shailesh. My 8,000 profit will be credited to my profit and loss account, and the profit to be given to Hitesh will be credited to Hitesh account. So joint venture account debit 16,000 to profit and loss account credit 8,000 to Hitesh account credit 8,000. So Hitesh account is to be credited for 8,000. Now after doing all these things, account has to be settled. I'm Shailesh. Hitesh has collected 125,200 out of joint venture business income. From that, he has given this many things. So remaining amount surplus with Hitesh, he has to give to me. So I am Shailesh, I am going to receive from Hitesh the difference of this account. And as you know, that 55,000 is a settled amount. So 125,200 minus all these things. So you will get a 55,000 difference. So I am Shailesh. I got 55,000 rupees from Hitesh. Hitesh is the giver. Credit the giver. Hitesh account is to be credited. The amount received from Hitesh is deposited by me in the bank. So bank account debit to Hitesh account credit. So this is how I have tried to explain you how the transactions are recorded. How the joint venture transactions are recorded by each partner in their personal books of accounts. Remember, once again, there are two systems of accounting. One, separate independent books for joint venture transactions are recorded, or independent books are not recorded. That doesn't mean that the transactions are not recorded. They are recorded. By whom? By a partner. Where? In their books of business, in their own personal books of accounts, the transactions are recorded. So these are the two options. Now the transactions are recorded by partner in their personal books of accounts. Then there are two options. One again, all the transactions are recorded, or only those transactions with which they are concerned are recorded. If all the transactions are recorded, this is how accounting is to be made. If the transactions with the partner is involved, only those transactions are recorded, then how the accounting is to be made by preparing memoranda joint venture account, or pro forma joint venture account, or working note for joint venture profit finding. That method will be discussed in my subsequent video lecture. So here, no separate books of accounts are maintained. Partner records all the transactions of joint venture business in his personal books of accounts, and how the profits are found and distributed, that has been explained to you. While explaining all these things, I have already mentioned to you various journal entries. I feel that you have followed all these things. Thanks to you.